Thank you, Emmett, and thank you, OIS, and good morning. I'll plan to cover a brief market update and also specifically life sciences and ophthalmology. We are still going strong on a 123-month bull market, which delivered 15% annualized returns. Although it has been a bit of a roller coaster with the December sell-off and recent trade tension, the S&P 500 hit an all-time high in July, eclipsing 3,000 points for the first time. In contrast, the last bull market was from 2002 to 2007 and lasted 61 months before the Great Recession and stocks dropping around 60%. Earnings in the first quarter of 2019 were in line with historical averages and generally stronger than the fourth quarter of 2018. Also to note, the economy was unimpeded by government shutdown this quarter. So what's driving the performance? The blue line represents the 10-year U.S. Treasury rate of return, which has generally lowered over the years. In contrast, the S&P 500 index has increased, which shows negative correlation between rates and economic strength. 2.5% Treasury return versus 15% annualized stock market return for the last 10 years. As we entered December last year, there was an expectation that there will be 2 hikes in 2019. Since then, there has been mixed signals regarding interest rates with the Fed during the first half of the year. Most recently, Fed officials have signaled there may be a rate cut of 25 basis points. Another metric that we monitor is the VIX, or the Volatility Index, which has stayed below 20 throughout the year, leading to continued productive equity environment. And another metric we track is the yield curve spread. An inverted yield curve is where the 10-year Treasury has a lower yield than the 3-month Treasury and is generally viewed as a strong leading indicator of a recession. While the yield curve has continued to flatten, we have not yet hit an official inversion yet. So just to touch on IPO activity. IPO activity remains strong for 2019 in life sciences. Low volatility combined with rapid innovation has led to an unprecedented IPO market. Great innovation from Medtech and biotech has led to 32 deals per year to date, and over $7 billion invested in life sciences IPOs, on pace with last year's near record year. The market is shifting with companies going public at an earlier stage. In 2017, 23% of IPOs were phase 1 or earlier. Year to date, 2019 has seen almost half of IPOs at phase 1 or earlier. Medtech has seen far fewer deals with no companies going public with less than $20 million in revenue in 2017, and 2 going public this year in 2019. Companies going public earlier indicate investor risk appetite has changed, and something that we are closely monitoring. Just to touch on the M&A side, M&A within BioPharma and Medtech remains active. Medtech exits have averaged about $150 million, while BioPharma year-to-date average has been around $800 million plus. This could explain some of the shift of VC dollars going from Medtech to BioPharma. Stocks in Medtech ophthalmology have outperformed BioPharma ophthalmology, as there's been a 67% increase, while BioPharma has seen a decline of 20%. We see valuation premiums at a high in Medtech. Investors are paying about 9 times forward year revenue for those companies. The long-term average has been closer to 6.5 times. During the Great Depression, you can see the low point on the chart where the market bottomed out at 2.9 times forward revenue. On the biotech side, the year has been defined by megadeals, including Celgene, BMS, and Allergan, abbvie, accounting for $176 billion in total along with a handful of other multi-billion-dollar deals, including Loxo, Lilly, Spark, Roche. The aggregate transaction value in 2019 has been over $200 billion year to date. Within ophthalmology, M&A has been accelerating in 2019, while IPOs have been steady at about 3 deals a year. And lastly, we expect continued ophthalmology news flow and financing activity in 2019 across both device and biotech as market conditions continue to be favorable. Novel treatments and technology innovation should lead to continued investor interest in the current market environment. Thank you.